Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 10th of August. All right, now we've had a pretty sort of eventful 24 hours, I guess. Now, there hasn't been much economic data probably up till now. We had the RBA on Tuesday, the RBNZ Wednesday, or Thursday yesterday, sorry. And there hasn't been too much else going on. So we've seen a lot of sideways moving activity, okay, on Euro. A bit of sideways, but predominantly sort of still edging down for cable. Aussie was trading sideways up until yesterday, and the key currency, and I focused on this yesterday during the Market Insight. Now, the RBNZ, we had the RBNZ meeting. They slowly put down a potential change of rates from end of 2019 to 2020. Now, that's saw the Kiwi drop about 25, 30 points, and it wasn't doing too much, right, at this point. So, and we had the Chinese CPI numbers coming out, so we're waiting for that. Now, this had a really perfect setup, and the currency did eventually drop, but the scenario around the entry did actually change somewhat. As we were waiting for the Chinese numbers, and this comes out of left field, so I'd say the Kiwi traders would have got this first. It was sitting above that trend line, so in a perfect spot. All we needed was so weak Chinese numbers and it collapses. Now, what happened was, out of left field, in an unexpected interview with Reuters, the governor, or Graham Orr of the RBNZ, came out and started sort of saying that they're basically going to have to put more rates or cut rates to get the economy going more, which is quite strange. He would say that after the meeting. Why didn't he say that in the meeting, right? It was a little bit chaotic. But what we did see is it led to a quick... smashing through that trend line. If I just get rid of those lines there, Kiwi dropped straight down here towards into the 60s. And that's where we were as we came back into the Chinese numbers. Now, in this situation, Kiwi is a sell, right? There's a dovish tone from the statement from the RBNZ. Then the central bank governor comes out with really dovish comments. So down here at 66.60, ahead of the Chinese numbers, it's almost untradeable. You're dealing at levels where it doesn't really make sense. But what does make sense is the move back towards 67, the figure. That's the resistance line that we're looking for. And you look for the currency to hit that level and drop down. Now, I generally get into the currencies, as our members would know, sort of 12 or 13 points from the key levels. Now, I was looking at 67, around 67. So I took it off this trend line. I ended up leaving an order at 93 to get short Kiwi. Now, this is one of the disappointing things, and you've really got to swallow the disappointment. Now, it got to within about sort of 3 to 5 points from the level, and you wake up the next day and it's almost 100 points lower. That is a bitter pill that you have just got to get used to having. Sometimes you get lucky, sometimes you don't. We had the right level. Had I just gone off 67, the figure, I mean, hindsight's always a great friend. I would have got set, but I went off the trend line, and that's where I sort of missed it. So anyway, Kiwi, right? So the initial statement of the Kiwi saw a dip, then it stabilised. The RBNZ governor came out and said his piece. That sent it down to sort of 40 or 50 points, down towards 60. Now, the Chinese data came in slightly stronger. That was enough to push it up towards 90. And then now, all the geopolitical crap that's going around, I'll come to that now, has saw the US dollar go through, well, not through the roof, but it's rallying across the board. And that's where the Kiwis had like a three-pronged hit. So this isn't just a result of the RBNZ. Okay, it's the statement, a little bit dovish. The governor came out afterwards and he was pretty dovish. And then you've got the flow-on effect from the offshore geopolitical issues. So I just want to give you a run through the Kiwi there because it's a little bit disappointing. So, and just looking at it, it looks like an easy trade. I can tell you that 40 points where, the key part of our entry was a bit of left field action from the governor. Now, if we come back and have a look at the rest of the major currency pairs, so the Aussie dollar has sort of dribbled lower. As you can see, there's strong dollar, US dollar across the board here, okay? Dollar yen's rallied, even dollar CAD's rallied, even with all the crap that's going on there. So we've got strong dollar across the board. That's easy to identify. Now, the key to going from here is identifying what is driving the US dollar. If you know what's pushing the dollar, then you're ready to trade. Okay, just knowing the direction is one thing. We need to know what the fundamental driver was. So obviously the US dollar sort of ticking along to the top side. Now with that, you're actually really coming in to adjust your charts. Now you've got that where it's based again. You're ready to draw a new support line. Looking at this, and if you bring back now, you're sort of looking for levels where what's the top of this thing? So I can't see too much on the hourlies. If I go to the dailies, we'll see a bit more action. Okay, and this is where, you know, technical analysis is subjective. So if you draw a trend line from here to the current price, it's two touches. All you're just doing is going to the current market. It doesn't make sense. But what does make a little bit of sense, if you have a look at all the geopolitical crap over the last, well, couple of months, you have a look here, actually from May through to June, we've had a bit of a multiple high here, and it's struggled to get above 95, sort of 60. Okay, so 95.53, if you go off the high previously, 95.65, we're right there now. Okay, and this is, you know, people will be looking at this. If you are short dollars, you're thinking, well, if it holds on here, I should be okay. This is where sort of the price action is going to get a little bit troublesome today. We go into the Asian session where the dollar loses a bit of its momentum. We may see it just trade sideways here. To me, there's so much crap going on that I can see the dollar continuing to trade at the top side. So that's the US dollar. You look at dollar, the offshore dollar yuan, right? It's now sort of trading sideways. I've sort of blown this up a bit. You can see there's the periodic, I should say, you know, 150 point spike, but it's not doing a lot. The dollar is slowly going up. In this environment, you probably would have expected with the dollar rallying against all the majors to be a lot higher, but it's not. And that's a little bit of an oddball. All right, now let's just have a look. Let me just come back and show you what's going around the news-wise. It is a geopolitical time bomb. There's the Turkish lira hits record lows. It's down about 30% on the year, I think it is. And it's over a kerfuffle, over a diplomatic rift. You know, there's a pastor over the US pastor that's been imprisoned in Turkey. They're blowing up. It's very reminiscent of the Saudi Arabians being really pissed off with Canada or Trudeau. You can still see one of the news stories down here. And they're pulling out of Canada. So this is like getting, like these trade tariffs have started to multiply into global rifts with countries over incidents that, you know, otherwise wouldn't usually get picked up. The Russian ruble, obviously with US sanctions on Russia, now that's blown up as well. So Turkey and Russia in all sorts, you'd expect these sort of countries to come together and form some sort of alliance. So the whole trade situation, and you've got Canada here, NAFTA, there should be a Brexit in here as well. There usually is every other day of the week. So we've got Brexit, we've got issues with the US and Turkey. That's going to impact, you'd have to think, would impact Europe, Russia as well, Canada and Saudi Arabia, Trump with the world. So all you've got here, there's no mention of what's going through on the currencies. It's all geopolitical sort of hullabaloola. And then you come back. And so when we're looking at the currencies and you're trying to sort of piece together, we know what's going on. The US dollar is rallying, but it's not, you know, with economic numbers, it comes from a starting point. Like, for instance, the numbers that are coming out today, or the things that are expected, the RBA policy statement, then you've got the manufacturing production. So manufacturing production, we know when this starts and finishes. There's a time for this release. These geopolitical events don't have a specific start time and they don't have an end time. So the currencies where they are right now could turn around instantly or they could keep going. It's hard to gauge. So today's trading conditions, geopolitical issues dominating, right? So be careful because the price action isn't tangible. You can't see where the direction is coming from at all. All we can see is the dollar rallying. Now, we're looking for levels to get in, but once again, as I said, this isn't a situation that you can measure. So just be aware as you go into trading. You know, we've got US CPI numbers coming up as well, and Canadian employment numbers. Now, if you look through the week, and obviously the US dollar is, you know, the major currency against everything, that CPI number is epic. It's so important, and to have all this geopolitical crap going in the background, it's going to make that opportunity really convoluted. And same for the Canadian employment numbers. These are probably the two prime opportunities. Actually, UK manufacturing, for that matter, is also a major trading event. And these are probably the three best releases, economic data releases for the week, which could give us momentum. You come back and have a look at the major currencies now, right? And then you start to piece together what's going on these pairs. Well, you know what? It's hard to work out where things are going. So euro, all you're doing is adjusting your charts. Now that trend line there, support is gone in euro. All we've got is at the moment markets that are sort of not necessarily free falling, but they aren't really working for us, right? So if you have a look at dollar yen, we had weak machinery orders yesterday, really weak numbers out of Japan, pushed it down about 10 or 15 points, and now it's back in the range. If dollar yen doesn't really have specific direction, that tells you a lot about where the direction for the US dollar is coming from, right? The dollar yen itself is a natural dollar currency where the yen is so neutral that it should show us what the dollar is doing. It's just trading sideways. So these other currencies are just being impacted by the geopolitical events. Kiwi, as I focused on yesterday, is the only one pair I can see that actually has clear bit of bias from the RBNZ, which is down, right? That's why I'm still looking to sell Kiwi on any sort of rallies, on any Kiwi crosses. That's the best pair to be trading at the moment. Dollar CAD sideways. Now, sterling just falling with the dollar strength at the moment, but Brexit has been dominating. Manufacturing production numbers today on the pound. So you're watching sterling. You can keep an eye on the RBA statement today, but that's been pretty neutral for the last year and a half. But you wouldn't expect them a lot. And then once those US CPI numbers come out, all the majors are going to be in play. So when there's loads of geopolitical events coming out, if we've got US numbers, you've got to really focus on where specific direction is. Now, all these currencies, the dollar is rallying, right? To me, to be safe, the best trade or the only trade is a strong US CPI number, because that goes with the geopolitical momentum at the moment, and that's where the trade is, right? So if you are looking for a golden opportunity, just keep an eye on these numbers and actually have a look at, focus on where the direction is going to come from. We do have some, another opportunity for dollar yen to grab a short-term bit of direction here. Okay, we've got some GDP numbers out of Japan. That may give us some sort of trade in the Asian session. You need significant variance like we had yesterday in the machinery orders. Well, you actually do have the UK prelim GDP numbers there as well. That's worth having a look at. But as I said, you're really looking for weak sterling numbers. That goes with the short-term momentum in this geopolitical environment at the moment. The manufacturing production numbers are very solid. They come out at the same time as the GDP numbers, so keep an eye on that. Sterling's going to be pretty busy. But the two major events, or let me just focus on the major one, CPI, we want strong numbers here, and that's, to me, that's the only trade. If you try and sell US dollars in this market, you'll probably get swallowed up pretty quickly, and it will reverse because the geopolitical events are dominating. And dollar CAD, you may get a short-term move here, but it's going to be pretty loose, all right? And that's where, as you go forward as a FX trader, you'll start to become very aware of these geopolitical events and situations that Trump's building, and you'll be really pissed off because once you do get these big numbers that are great directional opportunities, and I'm not talking about just trading the number, I'm talking about trading the direction that comes from the number that goes with the trend in the market, you'll get really pissed off and start to get cranky like I do when these big numbers are coming out and then you've got all this geopolitical crap in the background because it defuses the number. The market doesn't know. The traders are looking across the board. They don't know what to look at. And that's where direction becomes really loose and crazy. All right, guys, that's pretty much it. It's a bit of a detailed wrap. As I mentioned yesterday, the Kiwi, to me, is still the best directional pair. Okay, and that's because that's the only pair that has economic numbers or a fundamental driver, that the RBNZ behind it. The rest of them are all sort of loosey-goose geopolitical crap. I think that it's flushing out positions. I can't see, well, let me just come back to that news. I was going to say I can't see a major trend forming except if these geopolitical issues really do drag on and continue, then the market may just continue to buy US dollars. And that'll be the trend. It'll be driven by geopolitics, which is an easy trading environment, but be prepared for that to continue. All right, guys, have a good trade day. As I said, it's going to be a little bit tricky from here. The currencies are in the middle of nowhere. And yeah, all you can do is keep refining your analysis. If you don't see a clear opportunity and you don't understand what's going on, don't feel pressured to trade. That's the most important thing you have to understand. And just focus on from here. All you can do today is focus on, so you've got your technicals, okay, that are there. We've got an Aussie level down here at 73.60. And then now we want to match it up with the fundamentals. And you want to come through and actually have a look at the pairs that are going to be in play, where direction's coming from. And we've just seen the GDP numbers drop out of Japan, really strong. So that should put an upward bias straight away. Well, in 10 minutes, when the Japanese equity market opens, I expect the Nikkei to rally on those numbers, and we should see dollar yen higher. Funnily enough, that goes with the current trend in dollar yen. So what you can do is, I mean, I'm just looking at dollar yen at the moment. It should be a buying situation here through 15. Probably even potentially test the top side. Once again, this isn't a trend changer. This is just one little drop in the ocean. Yesterday, we had really weak machinery orders, which drove it down. And today, we've got the GDP numbers, which should push dollar yen up, possibly towards this resistance line. But the key thing is it's going with the strong dollar numbers. So that's where it'll come. Now, the move generally happens when the Nikkei opens, Japanese equities opens, and that's in 10 minutes. So we'll keep an eye on that as we go forward. Anyway, guys, that's a bit of an extra heads up there on that one. We'll see how the trade day goes. Just keep your capital intact. These geopolitical events are situations where you can get churned and burned very quickly. So just make sure you're not over trading and putting too much capital in trying to get your cash back if you have been losing. All right, guys, have a good one. We'll catch you in the trade zone. All the very best.